Hey, this is Awais with eMiniPlayer.net, and this is a recap for Tuesday, May 7th. So let's quickly go over our trade plan for the day. So overall, contextually, ES had broken out to new highs over the last few sessions and had now balanced and consolidated in a range. And the idea was that now ES could either push higher and get to another short-term exhaustion point or fail and fill the gap at 08.5. We had initial resistance at 19.5 to 21.5. This was the first potential exhaustion point on the upside, and on the downside we had pre-market support 11.5 to 13.5, and then the bull bear zone at 07 to 09 right below it. So bigger picture, the idea was that we're clearly bullish, but short term ES could be reaching an exhaustion point, and we were going to consider short setups at resistance as well. Now this is in contrast to the plan that you might have seen a couple of days ago, where the idea was just focusing on the long side, right? It was clearly in an uptrend. It was we had broken out. So on certain days, we'll be leaning certainly one way or the other. And when we think that shorts are going to be much more risky than longs, then I'll point that out in the trade plan, and that way we're not caught on the wrong side. But heading into today, we were going to consider trades on both sides, but primarily since the bias is clearly bullish, we're going to be more aggressive still on the long side today, with a potential long at 11.5 to 13.5. Now this zone did call for some caution, and it was a real-time read. It wasn't like an automatic long, but it was still a support zone that we were going to look to trade. And then 07 to 09 was kind of an automatic long setup for us. So with that being said, let's go into the charts. Now this first short setup off the open, you can see that ES hit 19.5 to the tick, but this wasn't really very obvious in real time. Now we did enter short, actually a little bit ahead of 19.5, but the reasoning for it wasn't just because it was slamming into resistance. The reasoning was that we still had an open gap on the downside at 13.5, and if you were watching NQ, you can see that NQ was actually failing at its overnight high. And since NQ has been leading the upside, a weakness in this market could at least stall the price action in the other markets, right, in ES and TF. So we kind of use this idea of NQ slamming into overnight high and failing, and just, if you look at the opening range on NQ, overall the price action was, pretty weak compared to ES. So that provided us with a real-time tell. And then we did have, of course, resistance over here, so we did have a zone. So we ended up taking a short over here, targeting the gap fill on the downside. Over here you exit at 13.5, and then this zone is still a long setup, right? I mean, you can see how quickly price pushed into it. Typically these kind of moves where ES is just slamming right into a zone, especially when it's aligned with the bigger picture context, those are some of the best trades, right? So we traded this area long, got long I believe at 12.75, and then the target on this was a bounce up to the VWAP and overnight high on ES. And again, we were looking at NQ, right? And as NQ bounced and headed into its VWAP, right, that was a short-term inflection point in NQ. ES was also at a short-term inflection point, VWAP overnight high. Certainly made sense to at least take a scale out in ES and then kind of see what it does from there, because we were expecting this area to kind of chop and balance a bit because NQ was at its own inflection point, TF was at its own inflection point, ES was also heading into the opening range, overnight high, VWAP, all that stuff. So it made sense that we would at least take some profit there, because now ES could chop and break to either side, right? Like if that upside momentum didn't continue and the internals didn't catch up and start to get stronger, then there was a chance that if ES was going to fail and go down and fill the gap at 08.5, it was going to do it from this area. So basically the way that we're trading this is we're on a daily basis, we're basically trading it from inflection point to inflection point, right? So for example, this is an inflection point where the sellers can overpower the buyers and push it down. Then this is an inflection point where the buyers can step in, and now the next inflection point is right over here. So, if you really want to simplify it, that's a good way to look at it, is just get involved in the market at the key inflection points and avoid the stuff that's in the middle, right? That's really what's going to help you become consistently profitable and get you into the right trades and keep you out of the choppy trades where you enter, it goes your way, comes back, now you're taking a little bit of heat, goes your way again, comes back, gives you heat. I mean, those are tougher to hold. But when you get in a trade like this one, where the minute you get in, it's essentially working for you, psychologically it's a lot easier to hold that kind of trade. So those are ones that we focus on more. Now sometimes it'll get to a zone and it'll balance and then go, and we see that a lot, and that's normal and that's okay too. But again, we want to be getting in at the right trade location, and that way, even if it's balancing a bit before it goes in our direction, it's okay, right? We're gonna have that confidence to hold the trade as long as we're executing according to our plan and at the key support resistance zones. So we took a scale out over here, and the final target on this long setup off the 11.5 to 13.5 support was initial resistance 19.5 to 21.5. So really anywhere in the zone is a good exit, but considering we had a very narrow range yesterday, and today we were actually running pretty decent volume, about 90% of the average volume is the pace that we were running at today. There was a pretty good chance that we weren't just going to fail at 19.5. At this point, looking at the price action, very high likelihood that the low of day is in, right? Once you rejected it here and now you're back up to the highs, pretty good chance that this isn't just going to roll over and make new lows, especially when you take a look at the internals, and you can see that the internals are holding up quite well, holding above plus 200 on the S&P AD, pretty decent levels on NYSE AD as well, and VIX is kind of just balanced, kind of muted. So when you take the whole thing into account, pretty good chance that this is going to extend the range a little bit to the upside, and then maybe it'll balance or do whatever. But in the short term, I think you could take profit here at IB high, but it made sense to actually hold the long for a little bit more and then try to get out kind of towards 21s. I think that was a very good exit on the long setup, and that's what we were doing in our own account and recommending to everyone else as well. So hopefully you took advantage of this. Now, as far as the short setup here goes, right? Not exactly the best setup. I think that this is a good area to exit longs, but on the day time frame, our target on shorts, if you're taking a short anywhere over here, is our first scale out would have to be IB high. Again, it's inflection point to inflection point, right? So for shorting 21 quarter, our first scale out has to be a tick ahead of the IB high, because this is the inflection point where ES can now bounce and then push to another new high. So whenever you're entering a trade, keep your target in mind. So before you get in, figure out what is the target on this trade, and that'll help you figure out what the risk reward is on the entire trade, right? And it'll just kind of tell you, hey, is this a zone you want to trade? Like, over here, if you're getting long, your eventual target is up here, so the risk reward is very good, and even your scale out target is, about 4.5 points away, depending on where you're getting in. But over here, your first scale out even is, maybe 6 ticks, something like that. So this is, if you're taking a short, just kind of keep in mind what type of trade you're in, so that you're not just sitting there getting chopped up. And the final target on this, resistance over here, if you shorted it, would have been back down to the 17 to 18 area, maybe 16 to 18 at most. Wasn't really expecting this to go below the midpoint of the day at this point, given the strength in the market and how well the internals were holding up. If you look at the NYSE AD, you can see that we broke above it, and then we held above it and continue to push to new highs on the NYSE AD. And that's quite bullish in itself. TF was also at its highs. So again, this is not the best short setup. Now, it's still at resistance, and if you took it, the market still gave you edge. You didn't lose money, but just good to know what type of trade you're in, what the targets are, and then if those targets are in line with your risk plan, then you can confidently pull the trigger and get in. We actually did take a short here, but ended up taking it off for a very small gain. Didn't really do much over here, just because we realized that it's once it bounces at 19.5, it's pretty unlikely that's going to push much lower on the day time frame. Now, on the overnight session, that's a different issue. It can still head lower, but on the day time frame, it was unlikely that it would just reverse at this point and start heading lower. So really, the best trades of the day were either the short, not the very obvious one, right? Not a very clear short idea. So if you took a pass on this and didn't get in, perfectly okay. The main trade was really just taking a long at the 11.5 to 13.5 support, scale out by 17, exit by 21.5. And that was basically the day. All right, I hope everyone traded well, and we will catch up in the morning.